What is going on in the Los Angeles real estate market? Inventory is falling, but so are prices. Very unusual, but also weirdly reminiscent of 2022, a year in which home prices ended the year down 6%. Are we headed for a repeat of 2022? Let's find out. You're watching the Los Angeles Real Estate Roundup for September 16th, 2024. My name's John Schwartz. I'm a realtor with House Hack Los Angeles, where we use data and smarter buying strategies to make sure your next home purchase is the best investment of your life. Learn more at www.househack.la. Now let's get into the numbers. And we're going to start with the news is best, and that's right here with mortgage rates. That's right. We are looking at a graph of the 30-year fixed rate average mortgage rate in America over the past 12 months. The present is all the way over here on the right, and as you can see, rates bottomed out on 9/11 at 6.11%, bounced up just a bit on 9/12 to 6.15%. I don't think I need to do much drawing to demonstrate that this is the lowest rates we've seen since, well, in more than 12 months. In fact, rates are so low that Redfin is reporting that nationally, home payments are lower than this time last year for the first time in something like 4 or 5 years. With that backdrop, let's look at our local Los Angeles numbers. Right now, we're looking at the latest weekly print from Redfin for the Los Angeles metro market. As you can see, the median sale price of a home in Los Angeles dipped again under $900,000 to $897,000. That's down from a peak of $930,000 back in mid-July. And I'll tell you, anecdotally, the market out there is definitely feeling more accessible to buyers. New listing median price, this is the median price at which new listings are coming to market, ticked up this week to $920, $990, up from $908, $740. But we're still hovering in the lowlands down from June's peak. Interestingly, I noticed that this week, every year, there tends to be an uptick in listing price. Not so much in 2021, but 3 out of 4 is not bad. Is this because of Labor Day? Maybe realtors are feeling some Labor Day energy, some LDE. In new listings this week, we continue to float in the low double digits over last year's numbers. This week, we had 1,310 new listings on the Los Angeles market, which represents a growth over last year of 12.5%. And homes sold saw a decrease in absolute numbers this week, but the third straight week of increase relative to last year. This week, we sold 1,032 homes. That's a 6.9% growth year over year from this week last year. The week before that, we sold slightly more homes, but the year over year number was 2.7%. And the week before that, the year over year number was just 0.7%. Of course, watchers of the Los Angeles Real Estate Roundup saw this coming because the pending sales metric began to kick up over last year about 6 weeks ago. Now, pending sales is a leading indicator for homes sold because a home goes pending 4 to 6 weeks before the sale is complete, and that home becomes a home sold. But if we look at the trend, we can see that pending sales is declining rapidly toward last year's numbers, meaning that this bump we're getting in homes sold relative to last year will also be short-lived. It'll bump up for a couple weeks and then fall back to last year's numbers. And that's a good thing for buyers because active listings continues its decline. This week, the Los Angeles market saw 15,509 active listings. That's 23% over last year. As active listings decline, that of course means less supply, which of course means upward pressure on pricing. In order for active listings to remain high, we need to see more homes coming to market, which frankly we're not seeing relative to last year. We're kind of stuck in the 11 to 14% more new listings per week relative to last year. Or we need to see fewer homes sold, i.e. more homes remaining on the market. We're seeing an elevated level of homes sold, but pending sales tells us that that elevated level will wane off in the next couple of weeks. Hopefully, that will also slow the descent of active listings in the market. Now, when you combine supply and demand, you get the metric weeks of supply. And right now, we are at 15 and a half weeks of supply on the Los Angeles market, which is almost exactly where we were this week in 2022, when we had 15.6 weeks of supply on the market. And this is what worries me, that despite a very different mortgage rate landscape, we might be seeing a repeat of 2022. In some ways, we are definitely seeing a repeat in the metrics. And the question is the remainder of the year going to play out like 2022? Let's go back to the median price graph so I can show you what I'm talking about. So we're again looking at the median sale price of a home in Los Angeles, and I'm just going to isolate 2024 and 2022. What's interesting is that the first half of the year, of both years, 2022 and 2024, don't look too different. In fact, the trough to peak growth in home sales in 2022 was 11%, and the trough to peak growth in home sales in 2024 is already 12%. In 2022, once properties hit their peak, they fell off rather dramatically. And though it's only been a short while of time, we can see that since prices peaked in 2024, we've also had a pretty serious drop-off. Let me clean this up so I can just show you how the slope of this line and the slope of this line not too dissimilar. So what's interesting to me is that, again, the story this time is so different. Rates are falling. But what's very similar is the supply and demand story in terms of their balance, which is what we get when we look at weeks of supply, and the price story, which actually looks, so far, quite a lot like 2022. Where do prices go from here? Are we going to see a repeat of 2022? Subscribe and catch next week's Los Angeles Real Estate Roundup as we continue to follow this story.